Yo, what's good, boys? Today I'm going to be talking about the difference between a continuation and a reversal, or a continuation based model and a reversal based model. Many people you hear say that they trade continuations, and other people you hear say that they're trading reversals. But you need to actually know what kind of setup it is that you're looking for, so that you're not just blindly taking an inversion. You need to be in line with the higher structure of this. So in this instance here, there is both a continuation and a reversal play available in this price action here, right? And we can use this as an example. Say, in this instance, the reversal, we would have waited for price to come up into previous day high being our PD array, right, is PDH. Okay, this is our PD array. This here is our manipulation leg, right? So if this is our manipulation leg, and let's just imagine that there's a fair value gap here, what are we going to do? Obviously we're going to wait for the highest time frame fair value gap in the manipulation leg to get closed below after sweeping our liquidity. Only after this move here gets happen and we sweep the liquidity, activating speculation that price might go down. This gives us a reason to assume price may go down, and once we react sharply and inverse the highest time frame fair value gap in this whole trading leg here on the way up, not this whole move, just the last leg, we would then enter short and target this as a reversal play, right? And then we can target those lows or whatever we want to target. That would be our reversal. You see, we were trending up, came, swept previous day high, and then inversed this gap and then pushed lower. That would be our reversal play. But a continuation play would be the exact same thing. However, in this instance, our PD array is going to be a 5-minute FVG. I don't take continuation plays of less than a 5-minute, but we can do 5-minute or 15-minute FVG, right? So now, the same thing. When market opens, let's just say we are all the way down here. We're clearly bullish. We're clearly trending towards previous day high. By the time previous day high gets swept, that could be during the PM session, right? When there might not be volatility left, you don't backtest that time. Like, there's no reason why you should actually be trading at that time. But you obviously know where it's going. We've been ripping the whole day off open. What you can do, instead of waiting for the reversal play off that, you can just not fight the market, not fight the direction, and take a continuation play into that. Meaning, we wait here for a 5-minute fair value gap, 5 or 15-minute fair value gap to get tapped, right? And then after this gets tapped, this is our PD array. The same way this was previously our PD array, which we were hoping for a reaction out of. This is now our PD array we are hoping for a reaction out of. So once the 5-minute gap gets tapped into, we look for, this is now our manipulation leg, right? This here is now our manipulation leg, the same way this was on the way up, right? So the highest time frame inversion in this leg here, let's just imagine that there's like a 2-minute gap here, right? Once, let me just mark this out, 5M right, or IFVG. Once this happens here, we can then take the exact same play but into the high, right, targeting it, because we know price is very, very likely to go there. And that's the two ways that we could have played this scenario. And that's where discretionary trading comes in, because you need to decide now. For example, if this is what price looked like prior, right? And this is like a 4-hour fair value gap down here. If we've already strongly manipulated into a 4-hour gap, and now there's all-time highs over here, or previous day high here, sorry, and we've already made the move lower, we've taken out all the draws to the downside, you need to decide now, okay, in this instance we reversed, but it could very well be that previous day high gets swept and we just consolidate. And that's where you need to decide, okay, we've already swept objective to the downside, we are most likely going to push higher now without needing to refill, especially off open when you see that we fly 100, 200 points to the upside and that first presented 5-minute gap gets held. You can take a continuation back higher out of that into higher liquidity if there is any very relevant higher liquidity points. However, if we open here, say, it doesn't make sense for you to take, if this is market open 9:30 right here, it doesn't make sense, or it does, I mean you can do it, but I don't take a continuation play then. I won't. If we are, how far is this? I'm just gonna say it's like, if we're 50 points, if we're 50 points away from the PD array that I'm looking for, I'm not gonna take a continuation play. I'm gonna take that reversal play because the chances are we're gonna get accumulation, manipulation, and then distribution like that, right? But if this open and this accumulation only takes place down here, and now we're going like that, by the time this gets swept, we could have already been up 300 points, 400 points, and then, you know, we just do this for the rest of the day. Like, you aren't trying to get caught in the chop. If you can see we've opened low and we're clearly displacing towards a strong level, maybe previous day high, maybe 4-hour intermediate term high, maybe London high, low inside a fair value gap, something like that, then you can just take the reversal, the continuation play towards it. But obviously, again, like I said here, if we've got fucking London low here, let's just imagine, okay, we've got London low here resting inside a 4-hour, right? This is a very strong reversal point here, and if we open right there, we're not gonna take a move higher and then whatever. We're gonna wait straight for this to get swept, this to get inversed, then I'm gonna fill right about here, bang, target this, all of this. However, if we do this off open, this is our draw on liquidity, right? If we do this off open, and then you can take the reversal off something. Maybe if there's a 4-hour gap up here, yeah, sure, right? But if there's no liquidity that we're trading into specifically, I'll just wait, okay? Bang. Now we're in an uptrend, we flipped, and now we're pushing to the downside. I'll take a continuation model. I'll wait for one of these 5-minute gaps here to get filled. Bang, bang, reinverse the leg down. Clean. And you don't have to target this whole draw, but the fact that there's a strong key point that you're trading towards is makes it a lot more likely for the market to displace towards there with momentum. And yeah, boys, that's pretty much the difference between a continuation model and a reversal model. So I hope you guys understood that, and I hope that there was a lot of value to be gained from this video. Peace out.